Hello and welcome to yet another episode of Simplified, the podcast which guarantees to leave your pristine condition of ignorance untouched. We are here back again.
That was really good.
You know, we come with a promise.
You don't
right?
need to sound so surprised also, Chuck. You could have let it be.
No, that could have gone both ways. So
Nothing new for the same four idiots. Myself, Mr. Naren Shenoy, aged about 57, grey hair, and a lot of, all the grey matter is gone. And a lot of grey hair left, that's all.
So basically, aging is the process of converting grey matter into grey hair.
Grey hair, yeah. Exactly. Well, this is profound. We have come out with our own profundity, yes. It's like that. There was this guy named Paul Erdos who said famously that a mathematician is a machine to convert coffee into theorems. So, simplified hosts are a machine to convert. Yeah, he's a famous mathematician. He's an amazing guy, I'll tell you.
There is something called an Erdos number, no?
There's something called an Erdos number, yeah. If you collaborated with Erdos, your Erdos number is 1. If you collaborated with someone who's collaborated with Erdos, your Erdos number is 2.
Oh,
so
is this what
yeah.
changed into the Kevin Bacon number later?
Maybe, yeah. Kevin Bacon number was a little... Erdos number was badge one with pride among...
Yeah.
And
this
this
the original
Erdos,
coffee turned into a theorem.
Erdos was quite a character, right? So he was a famous mathematician. He had an aversion to owning anything. So he literally had no property, nothing. He used to live out of a suitcase. He didn't have a house. He used to land up. So if I'm Erdos and I want to collaborate with you, I just land up in your house and I stay with you for 15 days or a month or whatever, however long it takes to crack a theorem.
Wow.
And once that is done, I just pack my bags and I go to Chuck's place and work on the next thing. Like that. Yeah. He's written more than 1,000 papers, 1,300 papers or something.
Wow.
It's like
That's
couch
prolific.
surfing to math surfing.
So Silicon Valley companies,
that's
at
a
least
good
some of them,
saying.
they are machines to convert money into disasters, right? So the current disaster is the hot mess that you're seeing happening. And the four of us thought that, we should weigh in on this, before all the grey matter evaporates into grey hair.
Very lightweight veins.
the qualification being one wired subscription between the four of us.
And I think we'll have fairly diverse takes on this, right? As much as, sort of similar group as we are. Like on Big Tech, we always said to have the most diverse takes for some reason.
Fair enough. So what's been happening?
I'm guessing.
Yeah. So as of the time of recording, which is the end of November 2022, many of the big tech companies have lost about 50 to 70% of their market cap from the highs of mid last year? When it looked like all of them were just up and going away, especially Facebook has lost a lot of its market cap, and all the others as well, right? For a number of reasons. Ranging from people relying less on these platforms as we go back into the real world to self-inflicted damage by some people. And to me, we all know what's happening. There's stock prices are crashing, layoffs are happening, some companies are putting off their plans. But what's interesting to me is that there is no one overarching thing that's affected all of this. Like Twitter's being run amok because of one thing, FTX, Binance, and the whole crypto space because of something else, Facebook because of something else. It's kind of interesting how there are just so many things that seem to be happening together at the same time. Then you have the Ukraine war, supply chain crisis, semiconductors, whatever. So kind of interesting. So lots of places to possibly start.
Yeah. One common thread is a lot of money was sloshing around in economies, and the US government one day decided that wasn't good. It was merrily sort of, funding the economy like there was no tomorrow. And then the tomorrow finally came. So they stopped funding the economy and started increasing interest rates. Now what has happened, this is what somebody explained to me, because a lot of my grey matter has become grey hair, so I wouldn't be able to figure this out. But what that person explained was that since the US Treasury, the US government offers something like 5%, companies are expected to deliver 10 or 15% return. Otherwise, nobody wants to put money into the company.
While inflation is at
And-
9% or something in the US. for the
by
first time.
9% or something like that. So people, investors, high net worth guys, private equity funds, hedge funds, those kind of people, they just decide to scoop out all their money, extinguish all their debts, and give it back to the US government in the form of, just buy their treasury bills and hang on to them. And that there was a cascade. So valuations went down. Startups started suffering. Startups, they have to keep raising money because they need money to burn, and that wasn't happening. So jobs started going, and that's the whole sort of cycle that we are seeing now. And the question is, there are basically a couple of things that I really don't know the answer to. So maybe this conversation will help. One is the time, so everyone's been saying that there will be a time when Web 2.0 will go away and Web 3.0 will come. Is this the time? Or is this the primordial soup out of which this monster is going to rise? This life form is going to rise? Or is it just something sort of cut down? All the exuberance, the irrational exuberance is trimmed out, and then people sort of become more efficient, and then very soon it will be business as usual back again. So I've heard people saying that all this is going to be history within a matter of 12 months, or 18 months or whatever. So what do you guys think?
Yeah, at this point in time, I don't even have primary research or secondary research. I only have like second glass research of the reflection of the window that Srikeit has opened and is reflecting off his specs right now while we are
wow.
doing
Nice.
this
Oh.
podcast. Right? So, but see, like a few things that I don't understand with the benefit of us having living in India and consuming US media to a large extent is that everyone said that, the stock markets are, I'm guessing the phrase is irrationally exuberant because of like free money during COVID and all of that. And like Indian stock markets for the last 5-6 days have hit the highs of highs again, right? Instead of this going down, right? So the idea that all of this is correlated to financial success is like actual revenue model doesn't hold any truth as far as, I've dabbled in the Indian stock markets. At least that part is very clear. Right. The other thing that I want to, and I'm keen on, and again, sort of a fair disclaimer that I think a couple of weeks ago is when I put some money into like multiple diversified big tech stocks in the US because I thought they've gone down to a point where it seems an attractive investment. Therefore, just clarifying where I come from is that the value reduction hasn't happened to the degree that people are estimating it, right? So like if it is a Facebook and their next big bet is Meta, which I'm not sure how it will play out, to be honest, because the difference between what Meta has today versus what it has tomorrow is a future where people will spend more time on the internet for sure, right? Because the global village, as it were, has changed so much that I want to find a person who I share the same wavelength or trajectory with and want to spend a lot of time with. But I also want to do it in a manner that is not so, restrictive. I want to say like a phone call or just a Zoom call or something else, right? I personally don't think metaverse is the answer. But at the same time, like their sort of big bets have not yet become cash cows, right? Like the instance of WhatsApp, for example, or even Instagram for that matter, right? So there is like a lot of way to go before their value actually dwindles. If you look at the number of people who actually use WhatsApp or Instagram or even Facebook for that matter, as an MAU or a DAU, it is mind-blowing, right? As the world hits 8 billion as we speak, there is still a lot of value to be uncovered. The other thing is Twitter, where we all like to write think pieces because it is obviously a clown who is at the head and who's doing crazy things. The fact is that you didn't stay on Twitter for its tech efficiency, right? We lived through, and I think we joined Twitter before 2010, all of us. We lived through like several fail whales, like fail whale every 30 seconds, every 3 hours, like 5 times a day, right? We still held on to that platform purely for the network effects. And for some other upstart to now capture that market is going to be difficult, at least for our generation, which is also the generation which is most lucrative for advertisers and marketers, right? I don't think Twitter has a revenue model yet. At the same time, I don't think users are going to go away purely because like he's done some crazy things or like the app is crashing once a day or something like that. So I'm entirely skeptical of this, like, this is the comeuppance for big tech and all of that. So yeah, that's the opposing viewpoint that I have.
On a similar tangent, like one other aspect that I've seen was that on just the other day, I ended up watching Too Big to Fail, which was about the subprime mortgage crisis. I watched it it's an HBO HBO biopic. And while watching that, it kind of like struck me in some ways where there's multiple aspects to this, right? Like there's just not, like for example, in that particular crisis, first when the crisis struck and when this thing happened, like that's the entire thing about the Fed chairman trying to figure out different ways in which they can rescue Lehman before it crashed and burned. And then finally, like they arrived at the conclusion that they have to let Lehman die. And then after Lehman died, and they thought that the market would stabilize after Lehman went bankrupt. But then the next in the crosshairs was when AIG got threatened.
AIG,
right?
yeah.
And AIG was about to crash. And then the Fed stepped in and basically gave like about $125 billion of taxpayer money to all the banks so that they could stabilize and prevent AIG from crashing. And the reasoning they gave in that also was that they said while Lehman was a pure investment banker, right? It was a pure trader. And on the other hand, AIG, while it had done its share of bad bets and participated in all of the subprime mortgage nonsense, they were underwriting a whole bunch of regular good middle class people. I mean, their insurance contracts and all that stuff. So if they went under, like it was directly connected to the common people, like what was Main Street instead of just Wall Street, right? So that's where the Fed stepped in to protect them. So taking that and like kind of taking that analogy and pulling it over here, so while you would say anytime when the markets are going on, there is a certain amount of froth that's there, right? Which is true of the markets in any way in general. So when stock prices crash, doesn't always mean bad news. So I would take that analogy to kind of take it to what we saw with the FTX crash versus what you're seeing with maybe say an Amazon or a Meta and all these guys, right? FTX, the thing is, while crypto and it has its own benefits, and we have done several episodes on crypto and what that ecosystem can be like, the thing is, it's an ecosystem entirely based on because it's not backed by any central government, it's entirely based on the trust of the users, right? Yeah. And the moment that user trust evaporates, that froth can go from like 100% to a 0% in like a couple of hours also, right? And so that's where FTX went from that Sam Bankman-Fried went from being a billionaire to net zero in a week versus something like a Meta where you're seeing a lot of froth disappear. But what it comes to me as is these platforms it's the time that makes the difference. They've been around for a while, and there are a lot of people who are banking on these apps, like you mentioned with Twitter, like we use with the Facebook ecosystems. The speculation is such that, oh God, the tech bubble has burst, let's all run. Versus the reality is that it's still not completely it's not like people have stopped using these platforms and the revenue has completely stopped.
Yeah.
So therefore, what I'm seeing right now is, and therefore, I mean, I would say is a wise move on your part, is that it is an investing opportunity to some extent, maybe right now. But again, these markets are also governed by speculation. So if there is continuing bad news over a long period of time...
clarifying, none of this is meant as investment advice at all.
Oh yeah, definitely not. If you're taking investment advice at this point, God help you. But
from us, especially from Simplified.
From us. Yeah, especially from Simplified. But I mean, I'd say honestly, investing advice from anyone right now is bad. but yeah, so... so the point that I'm trying to make is at the end of the day right now...
you have this from PG Wodehouse, right? If you do not speculate, you cannot accumulate. Many characters in the Drones Club keep saying that. Yeah.
What? Really?
We should also clarify at this point that pretty much every character in Wodehouse's universe is made of generational wealth. So they have enough to speculate their lives on.
Yeah.
So,
But so the final point that I was making was here is, I mean, you have these platforms. I mean, these platforms that have built most of these, the big tech platforms that have built their equity over several years. And that's why they are still like standing and people are still using them. But the one thing is, any kind of sustained bear period in these companies, this thing would not bode well. And it could, I mean, we could be standing on the precipice of, if not one of the big tech guys, at least a medium-sized tech guy going under, because none of these guys can stand sustained bear period.
So I look at it this way, right? So to some extent, what's happening right now is sort of like a correction of sorts, and we are basically back to levels of 2018, 2019 or so. Basically, what happened over the last couple of years is like all these platforms, valuation and stock market and all that aside, they just became so much more integral to our lives. They started hiring in such huge numbers and went on these super ambitious mega billion-dollar projects that somehow it just became, this is the way things are right now, and this is the way it's always going to be.
Yeah. New normal, as it were.
Yeah, it's the new normal, right? So it's gone back to 2017, 2018. So to correlate to the stock market point that you guys were making, if you think Facebook was a good buy in 2017, then yes, please then invest in Meta, because it's pretty much at that price at the moment. It's worth rewinding back to the last time there was a proper tech crash, which was in 2000, and that entire dot-com burst that happened over there. I don't think that was sort of like a lot of companies went under at that point of time, right? So we are seeing so many similar parallels right now. A lot of money was pumped in, a lot of companies went under, but I don't think that was sort of a repudiation of the internet as much as sort of like a culling of the herd in some ways. And the companies that did survive over there are the giants of today. So to some extent, I guess that's going to happen. It's going to force a lot of these guys to tighten their belts. I'm in a way happy. One of the takes that I read was that many of these companies are shedding projects that, they're not creating gadgets in an already over-gadgetified world, which I thought was kind of like a nice way of thinking about it. Apart from Facebook, they're now too deep into this metaverse thing, and now this kind of like they have to make it work, or they can't back out of it, and got a feel for Zuck at some point because they got into it when everything was on the way up, and it's like everything changed sort of like soon after. But everyone else is sort of like cutting back, right? You see like a company like Netflix, which I think is actually a fairly well-governed company, where they're trying to now not focus so much on number of users as much as how do we get more revenue out of each of these guys, or even Apple, Amazon, whatever the case may be. I think we are going to see a lot of the VC-funded froth over the last few years, which is just the blitzscaling race to so many million or billion users. I think we're going to see that going down a little bit. And you're seeing that happening in conversations in India as well, where the word profitability is starting to enter conversations a lot more.
I mean,
what is the swear word that you're using?
Yeah, one great thing that I saw was one of the tech giants, which I shall not name directly, like wound up one of their food delivery businesses. And when I saw that, I was just
thank
God.
Which one at this point?
But they wound
India,
up like their in India, so they wound up.
And they also wound up their edtech.
EdTech and food. So
which
when I
called
saw
attention to the fact that existed to begin with.
Exactly. But like when I saw those wind-ups, it actually on some level gave me some joy, because I was just like, I mean, there is some.
We don't need this.
After a point, like, and that's the next. And honestly, when you look at stuff like, food delivery, or when you're looking at some stuff like this instant grocery delivery situation, like, it's a massive bubble waiting to burst. It's a non-sustainable model, right? In this sense. And the thing is, we have kind of created dependence for a lot of people in India on a non-sustainable model, right? Like people now, like that's what, it's the luxury trap, right? What was a luxury of saying that where people would marvel at getting groceries in 10 minutes or 15 minutes. Now people are actually like planning that, like the morning cook comes and then you order the groceries based on what you want to cook. And by the time the cook is ready to make the stuff, the groceries are at home. So, it's become the luxury trap that has become a necessity at this point. And it's a non-sustainable necessity because it's purely VC funded, has always been. So, seeing some of these being wound up, and I'm hoping that'll restore some sanity to this overall order.
I think
of, like,
sanity is the word. Yeah, I think overall, I think what we're trying to get at is sanity with respect to business models, with respect to even employees and, whatever. I think this one good thing about a downturn always is there's good talent available for cheap. So you're going to see a lot of good ideas and companies starting off right now. In fact, just a few days back, saw something that was fairly heartening. In the US, the number of new company registrations is at the highest level that it's been over the last 5 or 6 years, which I think is kind of interesting. I remember at one point of time, long back, probably a couple of years back or a year back, when we were talking about how big tech was going up, I mentioned that company registrations were at an all-time low because entrepreneurs were scared of starting something that would eventually end up being copied or eaten by one of the big guys. It's kind of interesting. Sanity, I guess, is a good word to use.
Yeah, I mean, not necessarily sanity, but yeah, maybe in the long run. It all depends on the horizon, right? But like to your point, Chuck, that you made, like Meta has laid off 11,000 people, I think, and Twitter has laid off at least 3,500, 4,000 people, and Amazon's laid off quite a few as well. So that's like 20,000, 25,000 really like extremely talented people who are used to a certain comfort lifestyle who are now thinking, okay, hey, why don't we start up and become the new upstart, right? So it's probably going to be an interesting time. But also I think at least in the US, there's most definitely a recession coming, because the week prior to Black Friday was when Jeff Bezos got on an interview and said, if you think of buying a refrigerator or a TV, please don't keep the money in hand because like hard times are coming, right? So I think it depends on the horizon, but yeah, like just before Black Friday, Amazon saying don't buy anything was like pretty ironic.
So that was truly alarm bells going everywhere, because I mean I'm also from my perspective, I was also extrapolating that to like the markets themselves, the stock markets themselves, that I mean, if you're saying don't buy refrigerators, basically keep all your cash in hand. The markets are ready for a massive correction beyond where it's going. And to that point, what you were also talking about, like the Indian market hitting all-time highs, I mean, that is also a huge warning sign at this point where you're almost preparing for a massive correction in some ways, because the markets are right now frothy for no reason.
None of this is meant to be investment advice, but we would always recommend keeping a therapist number quite handy. Thank you.
Yes.
Naren's been watching on sagely for a while.
Which of these companies do you guys think are like in a good position to succeed? Like forget failure. Like which of these guys think might actually end up doing something? I mean, Apple and Amazon seem to be like the best placed right now. They seem to have sane leadership, and they also seem to have like a pretty solid business. One thing I kind of thought about sometime during the pandemic is when things were on their way up is how fragile a lot of big tech dominance really is. And it just takes one like rug pull to upend a lot of things. Like Apple just took away a lot of power from Facebook by removing app tracking on iOS, and that had a direct impact on their revenue over the next couple of quarters. So it almost seems to me like so much of this is built on, pretty much like a little house of cards of some sort. And It seems to me that Apple and Amazon are best placed to weather that with multiple revenue streams and so entrenched in the lives of others. And of course, smaller players. I don't see like an Airbnb, Netflix, etc. going away anytime soon. We'll be back after this break. Welcome back.
Yeah, so I think that fundamentally nothing is going to change except possibly for Facebook because of what Apple's been doing, right? And but Facebook is such a powerful marketing tool that it is hard to imagine it simply sort of disappearing into this into the sunset. So that's not going to happen. Even Twitter, I think that Elon Musk will find some way to monetize it. Right now, what the problem with Twitter is that it rewards the shallow over the deep. So it's, as somebody called it, it's a decontextualized machine. So you say something, and it happens, right? You say something, you say whatever, you don't like beans, French beans or whatever. And I can twist it to make that an insult on, I don't know, Indonesian civilization, whatever. And 4 of my friends can amplify it and 40 others can, and all of a sudden, it's completely twisted out of recognition. This is what Twitter rewards. The question is how, and it doesn't, so what happens is advertisers don't like it. because there's a lot of fracas and animosity.
50% of them have left. 50% of the top 100 advertisers have left Twitter recently.
So if you can't get advertising, how are you going to make people? How are you going to get revenue? You're going to try to make people pay, like YouTube subscription or something like that. You have a premium thing, and they have to figure out what benefit to give premium subscribers. They also need to prioritize certain things, such as quote tweets or tweets from, so you can rank tweets in number of followers that people have or something like that. They have to think out of the box, and they will come out with things. But if they change their algorithm, they can improve engagement. And I, for one, I find a lot of value in Twitter if I'm looking for immediate reactions to something or quick analysis to something, or so for example, there is this lady named Sofia Horta E. Costa. So she writes one tweet thread, 10 things that happened in China. So it's 10 tweets every Friday that tell you what, just sort of demystifies what's happening in China and tell you. You could read reams and reams and reams of China newsletters and not understand what's being said. You could read her 10 tweets and get a very, very good idea of what's happening. I would pay for that.
So are you saying the shallowness is a feature, not a bug?
No, shallowness is a bug. So they need to get rid of the shallowness, increase the depth.
10 tweet thread that you spoke of is basically shallow only. It has nothing to do with depth.
No, how do you define shallow?
No, so basically, like...
No, shallow is like you tweeted something and I said, this guy is he's a bigot or he's a Vatican spy or whatever they call it.
That's not the shallow part, right? The shallow part is that
I'm not talking, not shallow. I'm saying brevity is not shallowness. If she distills something into a tweet, just because it is brief doesn't mean it is shallow. Just because something is 20,000 words doesn't mean it is deeper than something which is said in 200 words. So
my counterpoint is that Twitter is actually now rewarding threads, right? But threads are still shallow. Like it doesn't go into the depth of the subject, right? You don't know anything about China. So for someone who is like completely disassociated with China, a 10 tweet thread seems very informative, and you never bother to delve into the depth of the 100-page, research article from which it came. Therefore, it is shallow. But I think like it's the opposite of saying that it's brief and brevity is rewarded and all of that. Like Twitter has switched.
I was talking from the point of view of Twitter, right? So Twitter, when you are in Twitter and there is shallow stuff in Twitter and deep stuff in Twitter. So whatever is deep in Twitter might be shallow by your yardstick as compared to something else. But for Twitter, that is deep. So that 10 tweet thread is deeper than some idiot rambling about some, imagined slide about something else. So I would rather read this 10 tweet thread.
Fair enough. I think broad point you're saying is you find value in Twitter for whatever reason and you're willing to pay for it.
That's point was that they have to find, number one. Number two is they have to find out ways of allowing different kinds of content. One thing they're probably working on. I don't see why Twitter shouldn't have very long videos like YouTube or, I think they have a limit to the size of the video. I don't know why that's so.
Yeah, so, but Naren, let's not try to solve Twitter's problems for them right now. Your broad point is you think Twitter is going to survive because culturally it has a place, right? That's the broad point that you're trying to make, right? Yeah, fair enough. But I agree with you. But I don't think it's going to be as big as Musk imagines it to be, or even what its potential could be, or what it could have possibly been under somebody else. He'll find a way to make it work, probably. But
Twitter's biggest problem is that it doesn't have a revenue model, right? And why doesn't it have a revenue model? It's pure and simple marketing. It has nothing to do with intellectualism or whatever. Which is that actually, like, if people really cared about deep opinions, they would read books rather than be on Twitter, right? The point is, no one does that. You're like looking for a distraction, which Twitter provides beautifully. The problem is that it has solved for it more elegantly than anyone else, like an Instagram or a Facebook, right? On Twitter, you have an extremely curated feed, right, of people you want to follow. So much so that anything else outside of it seems like spam, right? Which means that advertising by definition becomes a sore thumb that sticks out on your timeline and you revolt to it as a user, right? Whereas on Facebook, you're conditioned to say, okay, I have a bunch of friends, I'm connected with all of them, there are 2,000 people, I don't know some of them, so some of the stuff on timeline is anyway going to be irrelevant. And then ads come as a nice sort of break because they are hyper targeted. On Twitter, A, you can't hyper target to that extent, B, like everything is considered spam, so they start pushing out more things that are in your interest but things that you don't follow to try and soften that blow, which they can't do to like the extent that anyone else can, right? I think that is Twitter's biggest problem, is that if you try to solve for it by advertising, you won't get the kind of results that
It's
you
not
see,
going to
right? And
work,
I don't think it has anything to, probably it has to do with brand safety and stuff like that, but at the end of the day, most digital advertising is linked to performance marketing, right? The moment you show someone that you get a
let's not try to make this a Twitter episode by itself, but basically, Tony, I think what you're saying, and I think I saw this summed up somewhere, Twitter's cultural relevance is more important than its ability to make money, basically. Right?
So it's not set up. Whereas Facebook is set up for
beautifully set up to do that, and so is everybody else, right? And so is everybody else. Google.
And the question is, with all this shakedown happening, will Twitter be able to survive? Will Facebook be able to survive? Facebook, I think, will survive. Twitter, not so easy. Not so easy.
Because,
it will probably survive,
if you look
but
at
not
it purely
so easy.
from what Tony was saying, Twitter is very dispensable from a marketing point of view. Let's not get into the details of that right now, but that's a big problem that they have.
Even from a depth point of view, there are alternatives where you can get,
or at least we hope. At least we hope that they will
Simplified, for example.
Fair. What about the others? Who what do you guys think about? So Apple, I think, is just going to be the behemoth that it is, right? Because its audience is not affected at all. If anything, they've just gotten richer, and they probably are just going to keep it. I think Apple will continue doing what is. Amazon is interesting. They probably are the best placed to move into many different kinds of places. Amazon's move into healthcare, potential move into healthcare, could be a massive unlock for them.
No, even before that, even in digital advertising, right? Amazon has grown leaps and bounds and is pushing the narrative which Google pushed eventually, which people are buying into, right? That if you're a D2C brand now, you anyway have to be on Amazon and pay them, 15, 20, 30% commission, and also now pay for ads to be listed higher. And that ad revenue is becoming huge.
Absolutely. It's become so massive. And what's genius about Amazon, and I have to take my hat off to them for this, at the end of their ads, for which they pay them anyway, you buy a product for which you have to pay Amazon commission in any case. It's brilliant. I think and it gives them so much leverage.
GST and income tax and
absolutely. Absolutely. And if you see everything else that they're doing in terms of entertainment, I think they are planning to invest a few $1 billion in theatrical releases, which is for Prime and stuff like that. So things are happening over there. They are, of course, getting into medicine, health, and all that. So I see Amazon as being doing something pretty awesome. Scott Galloway was once fond of saying, what's the next multi-billion-dollar or trillion-dollar market that is ripe for being disrupted? And to him, the answer was healthcare, and arguably Amazon is best placed to do that and leverage and monetize it.
I have a sort of tangential question for you. While we said don't solve for X, one company/brand that seems to have solved for X is LinkedIn, right? Where they moved away from premium and into advertising and basically shitposting and promoting shitposting on LinkedIn, right? As much as you hate it. Are they profitable? Do you think that model works? I don't have too many insights on it, but I know that brands invest a heavy premium on advertising on LinkedIn, for example.
I think, again, I don't know numbers or anything, but I have a feeling that LinkedIn is very well poised over the next few years, because seriousness in terms of targeting the business audience and all that, I think if they are able to solve the shitposting problem or whatever it is.
Actually, it's a feature, right? Like I said, when you see shitpost ads,
but eventually people are going to get tired of that, I think.
When it comes to LinkedIn, I kind of think the opposite thing as you, Chuck, because I think while they're very well placed to do stuff because they have all of this stuff, I think they have a kind of similar problem to what Twitter has in some ways, where there is a large audience, that's a captive audience, that's a returning audience, that's time-spending audience, and all that stuff is there. But at the end of the day, if you look at it, and this is just, I have anecdotal plus some studies here and there. The thing is, most of the LinkedIn advertising, while again, and also this is also a fact that LinkedIn advertising is significantly more expensive than any of the other social media advertising. But then again, the volumes are tremendously different, right? Like, what you look at as far as meta advertising or any other advertising is concerned, LinkedIn advertising is minuscule and also still not quite there. And so therefore, while they have a massive audience and they are right now like really focused on like growing audience and building and like encouraging all of this engagement and like time spent and all that stuff, they're poised for it. But I think they themselves are struggling with this question of how do we monetize all this audience that's sitting on our platform right now.
I'll remain a little more bullish than you because I do feel that LinkedIn does have something distinct to offer in terms of targeting people by the profession verticals and all that. And I also have a feeling the kind of products that are going to be designed over the next few years are going to be more professional and B2B led rather than, just consumer led in some way. So I'm slightly bullish on that front. But actually, this point of LinkedIn opens up something pretty interesting. We've been talking about technology and companies at large. We haven't even mentioned Microsoft once. And I think this is a great... so that's the thing, right? I think this is great. I think what Microsoft has been doing over the last few years under Satya Nadella is actually doing very efficient stuff, being under the radar, going after that enterprise audience, not caring that there are people laughing about Teams and all that, and just going about their business. I think Microsoft is, and look at what all they own right now. They have Xbox, under which they have Activision Blizzard right now. They have LinkedIn. Yeah. I think Microsoft is extremely,
is Halo
extremely well
Halo
placed.
Is Microsoft? Or?
Yeah, Halo is Microsoft now. Halo
they
and Candy Crush also.
And
Candy Crush.
Also, right?
And Candy Crush. Yeah.
All the while also expanding their, expanding and kind of popularizing their hardware offerings.
So the hardware which has gotten
the Surface line, Xbox as well. All of the stuff is actually really
and they are providing the technology for Netflix's ad-supported tier, which means that they have ambitions about getting into digital advertising in that sense as well. So I think Microsoft is going to be sort of like, it feels weird because they did cross 2 trillion at some point of time, but I think they are the sort of like the dark horse in the conversation. And we say dark horse because purely from a conversation point of view, you don't speak about Microsoft as much as the others, right?
Again, I bought stocks in all of them equally except Twitter, which I think you can't buy now. But yeah, so I've put in equal amounts in all of these. So yeah, Microsoft.
What about who else? Like, like anybody from India, you think?
In the lead sponsor of the World Cup right now.
Yeah, apart from that, please. I'm
not even naming them, otherwise we're going to get lawsuits.
No, I think...
fair enough, let's stick to the US. Fair enough, good point. Let's stick to the US.
No, but one of the good things, I spent a fair bit of time in hospitality, was that I assumed that Oyo would actually do a lot of great things, right? Because I don't know if you guys heard the Seen and the Unseen episode with Yash and Samir from Bombay Canteen. The tech stack in hospitality was fairly dated, right? And there was a huge potential for something like your unsexy things like your reservation system, your point of sale, your delivery, your restaurant, KOT, all of that, right? And the great thing that Oyo actually did was disrupt that market and provide a stable tech base, right? And it doesn't matter that you're a small town hotel or whatever. You don't necessarily have to write in a ledger anymore. You could have just done that. But I don't know where that is going. But like that space is ripe for a disruption.
Yeah, Tony, I'm actually going to take your point, go ahead a little bit and actually take it ahead a little bit. I think unsexy businesses are going to define sort of like the next decade, which is again a reason why I think LinkedIn will succeed.
I'll add one more to what Tony said about the unsexy business. One platform or one startup that's doing it very well. Also, the disruption in this thing is Licious.
Yeah, of course.
Licious with their cold chain technology and how they've kind of done this whole thing about fresh meat to the different parts and all that stuff. Their obviously scale is significantly smaller in a country where they're right now only targeting urban people who have requirements for meat and all that stuff. But their overall tech base, their tech stack is apparently really robust. I was reading some articles about Licious, and they are doing some really good groundwork as far as like setting up their systems are concerned. Their entire pivot from saying that we are going to from speed to freshness They went from speed to freshness, where they made this pivot where they were all about like, oh, we are going to get it to you in so many hours. And then they kind of realized that, the main thing about that meat industry, the valued part is, it's more, the speed is valued for sure, but it's the freshness and the guarantee of freshness that's there. So in fact, it's even reflected in their current advertising. So all about like how fresh the food can be and how fresh the meat can be when it's delivered to you. So I think they're doing some really good work in that particular aspect.
I spoke to someone recently who knew somebody who made a lot of money selling software to spas.
Yeah.
Who made a lot of money doing this. And I was like, wow, spas need CRM software, I guess, and
exactly.
So unsexy businesses are, I guess, going to kind of be there.
Yeah, so that's what, right? Like if you think of OYO, hospitality has reservation as far as rooms is concerned, restaurants are concerned, spa is concerned. You can very well extend that into a chain like Enrich or something else, right? And like basically take the same tech stack across the board and like go nuts.
Yeah. A couple of years back, I was writing and I was researching for an article I was writing about. So my brother, Suraj, he works for a design company in Pune who does work specifically for designing the UX of enterprise software, which is the internal collaboration tools and things like that. So I got talking with him and I was like,
as unsexy as it gets, but like
as unsexy as it gets. But here's the thing, the more I spoke to, so I spoke to his boss, I spoke to a couple of other founders who do similar kind of things. And their point is, boss, see, consumer trends are going to keep coming and going, and there are going to be lots of whims and fancies, VCs doing this and that. Enterprise stuff is always going to be there. Money is always going to be over there. And once you get into that space, it's going to be super easy for you to expand into other kind of things. Imagine, for example, if you do one hospital's ERP very well, you can pretty much sell that thing again and again, or you've built up your expertise in doing this, going to another geography. In fact, a lot of the small consulting projects that I'm taking up right now, many of them are this kind of project. We have developed this kind of backend SaaS tool specific for this industry or this industry. So it's maybe that's kind of like the, what the future is. If there's a VC listening to this, then this is investment advice. Should we start something? A CRM software specific to Simplified.
We were going to start cat food.
Yeah, we are unsexy by definition. So I think
that's B2. That's Naren. That was B2C. That was in the last decade. Now come to me when you have a B2B. Okay. Wow. We have this became a lot more serious and thoughtful than I thought it would be.
Judging by my cat, anything to do with cats is enterprise software. I don't know.
It's like all the sexy stuff will come and go. Give me fish.
So while the tech itself might get boring, I suppose there is a lot of interesting stuff too.
Yeah, I mean, the great thing about India is that the market is huge, right, and growing. Except for, I think someone mentioned yesterday, I think it was Rukmini, who was saying Tamil Nadu and Kerala will probably start seeing declining populations soon, but the rest of India has like a growing population, right? And like that's going to be the major defining factor that where the market is.
Today I actually spoke to somebody who works for a company that targets non-English speakers. It's a media company. I haven't written the article yet, so I don't want to talk about it, but they're a company that's managed to make 2 million people successfully pay a subscription amount per year. And their whole funda was, it's a myth that only English-speaking metro-sitting people are going to pay this money. As long as you're able to show value to this audience, they will pay. And their point being, there's a huge market out there just waiting to be tapped and given content or, services, contextualize it to what they need, their aspirations and all that. So I'm pretty hopeful on that. Wow, did we end on a slightly optimistic note about the country as well? That should make up for
optimistic uncles.
Optimistic uncles we are. Okay. What are our conclusions broadly? We randomly went all over the place.
We started out wondering whether Web 2.0 is going to go and Web 3.0 to come. And we came to the conclusion that not on your Nelly, it's not going to happen anytime soon. And there is life in the old dog yet. Yeah, I think that's a good note to end this episode on.
Yeah. This was like a civilized group discussion. I enjoyed.
Yeah, totally.
So one of the things that was a big takeaway for me was there's this book called Thinking in Bets, right? Naren, I think I said also. Basically, like the funda there is that how do you hold your opinions in check, right? like take
Yeah.
bets on them, right? That's pretty much what I've done by putting money into these stocks. So 10 years from now, if no one else remembers this episode, my bank balance will definitely reflect what my bet was. And hopefully it'll temper my opinion in terms of what you think at a certain point versus how reality plays out. So yeah. I didn't mean to make it more profound, but I think I've gone there. So,
It's a terrific
who
book, by
bet
the
on
way.
that?
Go up. Yeah. Thinking in Bets is a terrific book. Highly recommended. Yeah. Stay safe. Stay relevant.
Invested in big tech. No.
Yeah.
No.
Stay safe, stay invested, and stay simplified.